Crypto is a unique asset class in that it started with passionate individuals, kind of been trying to swim upstream to find its institutional purchase.
Pengu and some of these top meme coins, they've done $300 to $400 million worth of volume just in the last 24 hours. Doge and Pepe, which are probably the two biggest, they've done over $2 billion worth of volume.
The CD20, it's going to be a nice way to trade that something's going to happen. A few of these blockchains are going to win, and I can just trade the market.
How many blockchains can survive? How many can actually literally be at the top? Crypto was always missing something, and most of us didn't even realize it. While stocks have SPX, the most traded equity index in the world, no index existed for crypto until now. Today, we break down the new and exciting Coindesk 20 index, the SPX of crypto. Also, we're going to cover some more exciting news about one of my favorite and most controversial subjects in crypto, meme coins. If that sounds good, I need you to do two things for me. Obliterate that like button and subscribe for more. Welcome to the trading battle. Time to lock in. You don't want to miss this one. Right, so today we have three amazing guests. We have Andy Baehr from Coindesk Indices. Andy leads research and product development of crypto indices and strategies at Coindesk Indices. He has 25 years of experience in global markets and investment management, with previous roles at Credit Suisse, BNP Paribas, Morgan Stanley, and Deutsche Bank. And his core focus is improving crypto trading and investing for people like us, traders. He's going to be breaking down the Coindesk 20 index, CD20, and how CD20 levels up the crypto space, and why you need to know about it. We also have Patrick Murphy, Managing Director of Eightcap for Europe and UK. Patrick is an expert in fintech and the digital asset sector, focusing on bridging the gap between TradeFi and DeFi. As Managing Director of UK and Europe, he is a key contributor to product innovation, and more recently has been the head of Eightcap Embedded, a solution that focuses on offering trading as a service to crypto exchanges, stockbrokers, and digital payment wallets. And last but certainly not least, we have Venkat Guntur, crypto product and strategy lead for Funded Prime. Venkat has been in crypto since 2017. Me too, by the way. 2017 club, love it. He blends his deep trading expertise with product strategy to reimagine the prop trading space for the new wave of users. He's driving efforts to modernize prop trading and make it a better experience for the new generation. Say hello, guys.
Good to see you.
Good to be here. Thanks, Nick. Hey, guys.
Hey, so I'm just going to jump straight into the question, guys. We want to talk a little bit about the crypto trading landscape. And I want to go over to you, Andy. So the crypto trading landscape looks very different than it did even just 2 years ago. What do you see as the biggest challenge and all the opportunities that are shaping up in the space right now?
Crypto is a unique asset class in that it started with passionate individuals. It didn't start with institutions and the need to necessarily raise capital. It started with Bitcoin and wanting to change the financial system. So it's kind of been trying to swim upstream to find its institutional, purchase, whereas other asset classes tend to start institutionally and then ultimately raise capital from individuals. As some people, bought their Bitcoin and stacked it and held on forever, but let's face it, crypto is a trading asset class, and you can have months where the entire market capitalization of crypto can turn over 2 or even 3 times in a single month. So as we were thinking about how to create structures and indexing around this, we wanted to honor the fact that crypto loves to trade, but it's also, as you pointed out, as it's evolving, it's starting to adopt or make its way across that bridge into more of a traditional investment context. The ETFs in the United States are a good start to that. But, it's still pretty far away from adopting or adapting to classical investment kind of principles. So the biggest changes have been that crypto is a lot more accessible in ETF form. It's a lot more advanced in its education stage. And in the United States and Europe, it's a lot better supported from a regulatory point of view. So the net effect is a lot more people are getting their first exposure to crypto, whether directly or through traditional investment wrappers, and they're trying to figure out how they want to trade it and then how they want to invest. That's individuals, advisors, institutions, and even sovereigns. So biggest difference is a lot more people know about it, and And probably the most exciting difference is when you read about it in the newspapers, it's not all negative news. It's actually kind of exciting.
So do you think it's changed for the better then with institutions? Because a lot of people in crypto, a lot of my friends actually say that since institutions have come in, it's changed so much that they don't like it anymore. I don't necessarily agree with that, but what's your thoughts on that, Andy?
Well, coming from, I think the reason I got into the business really was that a lot of my friends who were in the derivative space in the traditional market side had made the leap over, and they're like, this is great. It's like derivatives was 25 years ago. Things are new. You can build with good ideas and good intent, and knowing kind of how the right way it is to build things. It's almost like you're seeing the movie from the beginning again, knowing what the next scenes are going to be. That was tremendously exciting. I love the business of financial services when it's done correctly. So from our perspective and being in an indexing business, it's going to kind of naturally follow suit. You kind of want crypto to adopt the best practices so that more people can have a good experience. And whereas that might drift away from some of the more sort of organic ways that crypto has behaved, although I think a lot of those still exist and are easy to be found. We want more people to have exposure. Ultimately, that will make the asset class bigger, more democratized, more robust, have more users, and be on the right side of a regulatory process rather than just trying to stay, one step ahead of it. So that's our perspective anyway. I completely respect the side that wants to stay all degen and wants to remain kind of outside of the traditional system. That's how crypto started, with a passion of deinstitutionalization and decentralization. I think that's fine. But at the same time, if crypto, especially blockchain technology, wants to change the way people do things, that's going to involve capital raising. And if you want to find the biggest capital, you're going to have to at least accept that part of that's going to be on traditional rails. So we are bridge builders, and we kind of like that role. So I'm just in favor of it for the health of the asset class and for the ease with which more people will be able to allocate in their portfolios.
All right, awesome. Venkat, what are your thoughts? Because, you've been in the space since 2017. I'm sure you've gone through a lot of the degen cycles. You love meme coins, I hear. So what are you thinking? Is it good? Is it bad that institutions are coming?
I mean, I think I resonate a lot with what Andy said. I think to have a healthy space, we definitely, need multiple players all playing different roles. I think as much as meme coins, or, I think in the past we've had different cycles. We've had the ICO mania, we've had, and I'm sure we'll continue to have more iterations of, meme coins in the future as well, or, something to take that place, whether it's NFTs or whatever it is. But, I think as much as, as a centralized product, you're going to continue to have innovation and different things, that bring the retail masses. I think what we do need is a healthy Bitcoin and, like what Andy said, a very sort of healthy and positive experience for people that do come in through the traditional form. So, I think there's a space for both. And as our industry gets bigger, I think the space for both will get bigger.
Okay, makes sense. Patrick, embedded trading is part of this evolution. What challenges do fintechs and brokers face right now when bringing multi-asset access to retail clients?
Yeah, I was going to answer this and also maybe tag on a little bit from what Andy said around regulation, because it's kind of important in this question as well. So being in that kind of traditional derivative space, we have actually gone through a lot of this levels of regulation that crypto are kind of starting with MiCA and other regulations. So I think we're quite happy with that evolution, and also the fact that a lot of crypto exchanges are also kind of coming under the same licensing for a lot of the products, where they're coming under MiFID or FCA or similar types of products that are already there. So for us, this has probably helped our offering, where we're already licensed in those areas. We've got frameworks set up to offer those products, and we can help some of the crypto exchanges on their regulatory journey, because we've kind of been through those steps over the last 5-10 years. So for us, that movement of crypto coming into the same financial services licensing framework has been a great thing. It's something that we kind of thought, might happen 2 or 3 years ago when we started the embedded product. And it's obviously taken a bit longer for different reasons, but now that that's happening, it allows more of this convergence of crypto and TradFi products, which we're able to help with through our embedded offering.
It is really good. Regulation's always been a massive problem in the crypto space, or the lack of regulation, and people get hurt every day, especially on stuff like meme coins. But it seems like that people can trade meme coins in a regulated way now.
It's definitely damaged like the reputation of the industry at different stages, not having those consumer protections in place. So I think on the whole, regulation has been good to kind of bring the industry forward into its next evolution for sure.
Actually, Andy, tell us about CD20, because I really want to talk about that today. I love what you guys are doing with it.
Oh, thanks. But before we get into that, we're an indexer and we like to build bridges and we like to think about capital formation, but just personally and institutionally at our firm, we love meme coin trading too. We built a meme coin index that has 50 constituents in it. It trades at over 100 vol. It doesn't even take size into consideration, just volume. We want to honor the fact that people who want to trade, because they're trading against other people on things that may or may not have intrinsic value, but have community value. We think that that's a really important concept that crypto oughtn't lose. Meme coins and NFTs present opportunities for bad actors, but I also just admire how fast capital can assemble when an important meme coin comes to bear. Think of the meme coin that, of course, the Trump meme coin is a great example, that over a weekend, tens of billions of dollars mobilized to this one place. And I just think that that's, and efficiently and fast and without delays and wire transfers and things like that. I think that's amazing. So I don't want the tip of the spear of crypto, of innovation, of capital movement to suffer just because things are also available on traditional rails. When we were acquired, Coindesk was acquired by Bullish back in November of 2023. And the CEO, Tom Farley, and we were meeting, and he said, I want to launch a perpetual contract on an index. And this was very exciting, right? Because in the indexing business, especially in crypto, the first kind of thing that you want to do is you want to create an index that's either novel or representative of the market. And then you want to find an asset manager that's going to launch a fund, and the fund raises assets and you get paid a licensing fee. And that's great. Nothing wrong with that. But there hadn't really been an effort to really meet crypto where it was as a trading asset class, to say, look, let's do a derivative, a perp, in fact, on an index, which is very volatile and represents the entire asset class, or at least a very good representation of it, and let people trade, right? Institutions who are used to using index derivatives in equities and commodities and credit could now do the same thing in crypto. And so we designed Coindesk 20 specifically for this purpose, to be a trading vehicle, right? To be representative of the asset class, to not be market cap weighted, because that basically gives you Bitcoin, Ether, and some seasoning, but really to have some diversification across 20 top assets. In service of that role, we made sure in our methodology that all the assets are liquid, that it was a very regulatory friendly index in that it had to have exchange listings in different jurisdictions. It had to be available to people. We originally included meme coins, which was a very hot debate when we designed the index, but later excluded them because it would limit the number of jurisdictions that would be able to list products ultimately on the index. So meme coins were out, things like privacy tokens were out, and most importantly, ample liquidity had to be there in the right pairs. So that perp was launched, the first methodology-driven index perp was launched in January of 2024, and it just took off. It's now traded over 15 billion in volume, and the institutional participation has been great. So we kind of met crypto where it was. Let's build something that's going to be very liquid trade. Let's use this, this structure called a perp, which is a perpetual future, which is kind of at the heart of what people really love to trade in crypto, one of the best innovations in the space. And institutions started to eat it up. More importantly, and even more gratifyingly than if we had launched a fund and the fund raised a lot of money, is that the perp kind of democratized access to the index. It's not like we launched a fund, guess what? We raised a lot of money, we won, we're collecting huge licensing fees. It's the opposite. Here's a perpetual contract, please use it. Not competitively, let's form a community around that. And so we started getting incoming calls from all kinds of fund companies and DeFi protocols, and just about any custodians wanted to participate. People wanted to gather around the use of the index, which was very gratifying. And this is when we started talking to Patrick and company at Eightcap for getting the index in front of more and more people. Earlier this year, an ETP was launched in Europe. We've had other fund products, we've had structured products, OTC options, and now our engagement with Eightcap has been another fantastic way to get the index to the people. So you mentioned at the top the SPX of crypto. I think that's very apt in that people like to trade things like spiders and Qs, right? They like to trade the entire asset class. So the aspiration and the build architecture was to make Coindesk 20 the most traded, the most referenced, and the most benchmarked index in the digital asset class. And I think we're off to a great start. So, many more things to come in the future for this product. But so far in the year and a half, it's been a wild ride.
Oh, awesome. Patrick, how does Eightcap Embedded fit into CD20?
Yeah, so good question. As Andy said, we kind of saw this product come up over this year and took a look at it, and we were having conversations with Coindesk, one of the biggest brands in crypto, and kind of looked into the makeup of the index and the quality of the index, and thought that this would be something that our traders within Eightcap would like to trade, and then also that our actual embedded partner network would also like to trade. We're offering our CFDs to platforms in Asia and Australia, and they've obviously got the ability to buy and sell physical crypto on there, and to do some sorts of buckets where they can put multiple assets together. But the ones that we're servicing haven't ever had indices like the CD20. So they've been kind of really engaged with and wanting to get that on their platform. So at the moment we're trialing it on our own retail platforms. It's available on MetaTrader and TradingView for our individuals and professional clients. And then the next step for us is actually then making that available for our partner networks through Embedded. So, I think all up between the two partners we have at the moment, there's about 2 million plus traders. So the next step is kind of putting that in front of them. And it's something that both of the partners are really excited about getting it on, and they're also keen to look at the other indices, like the meme index and other ones that Andy mentioned. So we're kind of very, very hopeful that it's kind of just about to launch properly once we get it out to our embedded partners.
Oh, awesome. Is it available on our funded Prime, Venkat?
The indices specifically, or the Memecoin? Sorry, what was that?
The CD20.
It's not as yet.
Not as yet.
We actually, we have a couple of ideas around that we've kind of done in the background around, potential challenges around specifically the CD20. But the starting point is kind of get it available for our own clients, and then to our partners, and then we'll kind of start to look at ways we can engage through maybe some of the challenges as well.
Okay, awesome. So we really should talk about meme coins. Because I know Venkat wants to talk about meme coins. So love them or hate them, they're not going to go away. And now we've got the first ever meme coin trading challenge powered by Funded Prime. Venkat, tell us about why this launched and how it's going to change access to meme coins for traders.
Yeah, sure. I mean, look, I love to talk about meme coins, but I'm a crypto enthusiast. So, I was enjoying the conversation that Pat and Andy were sort of providing as well. And I think given the point on perpetual futures, I think what a great product. It's very specific to the crypto industry, but I think it's it's an amazing product. Something that I've traded as well. So was really enjoying listening to all of that. But sort of back to Memecoin. Yeah, so I mean, love it or hate it, it seems like it's here to stay. But we, as I said, before, we've seen that these cycles sort of move in iterations, right? So we said the same with NFTs, 2020, 2021. And at the moment, I guess in this, if you sort of think about it as a bull market, bear market, or a market cycle, I guess this cycle probably hasn't seen the same sort of euphoria over NFTs. It's not to say that NFTs have died. We'll probably see different iterations of these products come, in cycles. And I think at the moment, meme coins seem to be what everyone's talking about, right? Obviously, Bitcoin itself is doing tremendously well. It's at all-time highs, and I think the market itself is in a very healthy space. But I think the retail sort of market really likes something which is sort of fun, community-driven. It's something that and I think. In the past, I've always said there's been Bitcoin, there's been Ethereum, and then there's other altcoins. And maybe, sort of the retail audience understands meme coins a lot better than some of these altcoins, which is why I think from a performance perspective, I think what we've seen is that a lot of these meme coins or at least the bigger meme coins have performed at a much better, I guess, or interest, or have had much better interest. I mean, I was just looking at some of the volumes just today of some of the coins that, we offer in Funded Prime. So if you look at, we've talked about Trump coin, we looked at, Doge is obviously a very popular one, Pengu, and some of these top meme coins, they've done $300 to $400 million worth of, volume just in the last 24 hours. And if we look at Doge and Pepe, which are probably the two biggest, they've done over $2 billion worth of volume, right? So there's a lot of interest and a lot of hunger. And I think what we were sort of looking at from a Funded Prime perspective is, the prop trading industry itself as a whole, it's a bit stagnant. It's very much FX focused and very CFD focused. And what we wanted to do was, how do we gamify, this prop trading space? How do we bring in, trading instruments that people want to trade? And we sort of looked at, what was happening on crypto exchanges and thought, look, these are sort of the assets which typically funded accounts / prop trading firms have stayed away from just because of their volatility. And we thought, how do we bridge the gap between what meme coin traders want and bring it basically as a solution, right? So what we found was these were liquid pairs. So we've got about 13 meme coins, I think, off the top of my head. So these are the top 13 meme coins. And I'm sure a lot of them will be in a meme coin indice or would make up the meme coin indice. But these are Doge, Shiba, Pepe, Pengu, Trump coin. So all of the sort of top meme coins. And we thought, okay, look, they're obviously a lot more, I guess, or lot less volatile compared to, your pump.fun, pump and dump launches that you're seeing on a daily basis. And we thought, how do we make sure that we can package a product that, people are happy to trade? And I think the cool thing about funded accounts is that, they're very accessible, they're gamified. So, obviously they sort of touch into the elements of social trading and so on. And I think, we found a way to sort of make that work. And so far, so good.
Ah, awesome. Andy, I want to hear more about this Memecoin index you guys got.
Oh boy. Now that's all anybody's going to want to talk about. We designed it in honor of the idea that meme coin trading is important. We want, obviously, people to have a good experience and people to have a long trading history, which means they continue to have a good experience, to trade responsibly. Personally, and this may or may not be a view of our firm, but personally, I think that people trade a lot of things speculatively. They trade stocks speculatively. They trade commodities speculatively. And they trade in a community way, right? They look for advice amongst their peers, whether they're in the same city or around the world, and they'll place their bets along those lines. The nice thing about meme coins is that there is the definitional absence of fundamental value underneath, right? There's no hint that, oh, you're buying this because it has this value proposition and therefore you have to attach yourself to that narrative and buy it or short it because you think that that's overdone. Meme coins is like, no. You're buying this because you think the number is going to go up, or you're selling it because you think the number is going to go down, and you're doing this as a crowd. And so there's the absence of, I guess, false narrative. And there's a purity in that. And I kind of honor that, because there are a lot of things in traditional finance, which some days I miss, some days I don't miss, right? That where there is a similar sense of meme-like trading enshrouded in rational behavior. And so the absence of the rational behavior just allows meme trading to be what it is. So there's a truthfulness to that. We decided in building a meme coin index to go deep, right? It wasn't going to be just the top 5 biggest ones, because a lot of them have taken on their own personality. And I don't think you trade Doge so much like a meme coin like you would like the Trump coin, right? It's long, it actually is older than Doge, is older than Ethereum, right? It's its own blockchain, and it kind of almost is less memey than we wanted it, the index to be. So the index is rebalances every month. It tries to get in new releases, and it's the only index that we have that's based strictly on volume, not on size. So if you have a very new, small, but high volume token, it can get into the meme coin index, 30 days of seasoning and then 30 days of rebalance. It can get in there within a month or two. So it might miss that initial weekend pump, but if it sticks around after that, it can be eligible. And we look across all exchanges. So there's no other centralized and decentralized exchanges. And therefore, the restriction to get into that index is pretty low, as long as there's volume. So things come in, things go out. We've seen some crazy names come in and out. And I think what you end up with is an index which, it's not a buy and hold product. You wanna be able to trade it. It's one of the few broad-based crypto things that still trades at over 100 volatility. And it's fun. And Bullish launched a perp on that index as well, which hasn't traded as much as Coindesk 20 because it's more of a specialty product. But it was important that people are able to get long or short the index. So people who trade on Bullish have the ability to maybe have their own meme coin portfolio that they want to go long and then short the perp against it to hedge, or just trade in and out. So we're very happy with it. I want to support that index as long as we can. I don't think we're ever going to see an ETF on it in the United States. I don't think we'd see a traditional exchange futures product listed on it, but I don't care. We love looking at it every day and love seeing it move.
I think that one as well, we're really interested to see amongst our kind of retail traders and partners as well, because I think it's kind of a good one for those that are a little bit newer to crypto as well, but they're trading the market. They don't have to get into the DeFi wallets and do it, and they don't have to pick which one. They can kind of just trade the trend a little bit. So it's it's almost a different way, because as you said, the meme coins are about community and getting in the different groups and kind of understanding what's best. But this will add like a second layer of liquidity to that trading, which I think will be really interesting for retail traders on your everyday kind of centralized exchanges.
It's such a good point. Like you get into something like memes and you see there are thousands of them, and you think, how am I going to pick? If I pick the biggest ones, that's kind of boring. But where do I go? And you get frozen. You realize that the sector itself has its own personality, and you just want to latch on to that personality. That there are going to be swells and retractions of the whole meme coin space as capital decides to head that way or capital heads out of that way. Sorry to cut you off, but that's such an important point. The thing that actually, Nick, your question at the beginning was, how has crypto trading changed? I think that the thing that I've noticed the most this year is that the fast money has been very migratory, right? Last year, it was a lot of Solana meme coins. And then everybody and it's actually moving into and out of crypto now, much more migratory. MicroStrategy and other digital asset treasury companies. And then and then Ethereum takes off and has kind of led the rally all the way from April through July. And, then it's like, oh, well, this new digital asset treasury is going to be on Hype, or it's going to be on Tom Lee's doing something on Ethereum. The money is so fluid. And if you want to think, or if you think that money is going to find itself back to meme coins, you don't want to waste a second to think about which one to buy. You just say, fine, put it back. It's moving back to memes, so let's get there. And then you can pick up, if you're right on timing, you can pick up a huge amount of trend, with that movement of the fast money.
It's a very rotational market right now, and it has been for the whole last 2 years.
Yep.
I was just going to say, yeah, it's interesting. Like, I have been in the space for a while as well. And I remember when, money used to move into certain blockchains, and then it would move into the meme coins on the blockchains. And there was like very smart traders that knew once things went to here, then they'd go to here, and then they'd go to here. So they could kind of predict what was going to happen based on different moves. And I feel like, I'm not sure, maybe I'm not in the depths of that anymore as much, but I feel like it is a little bit more, they're moving, still the same in that, but there's also moving out to actually, as you said, stocks as well, and ETFs and other things outside of that DeFi world. So it's interesting to see how there's like another layer that's happening on top of that DeFi moves.
Actually, I think you're probably going to say the same thing as me, so I'll let you take it, Venkat.
No, I think just to build on to both those points, I think what's quite interesting is the sort of different blockchains, right? So I think this cycle, or at least, last year it was very much Solana heavy. Solana was very much driving, I guess, the meme coin mania, if we want to call it that. But there were periods where AVAX had their own sort of run, and then it went to Binance Chain. So BNB had a bit of a its time in the sun. And I think what's interesting is within Solana now you've got different ecosystems that are sort of dominating the space. So originally it was Pump.Fun, and then I think it sort of went from that to Bonk.Fun, which was sort of a competitor to Pump.Fun, right? And so a lot of those tokens started running. So even within sort of the meme coin cycle, you have so many different chains, and within the chains, so many different sort of these launch pads that are all taking off. And I think that's where what Andy's talking about, where actually exposure to the actual market is probably more important than just individualized tokens, because there's so many of them. And I think especially since the rise of these sort of Pump.Funds and Bonk.Funds, where pretty much someone could launch a token within 30 seconds on any sort of on anything, right? Like pretty much everything from politics to a meme that's going viral on TV. It's just too much. It's almost got to the point where it's too many options, and therefore exposure to the market is probably the most important thing if you're bullish on the space. That's where
there's too much junk in there now. It's too messy. It's better just sticking to an indice. I think we haven't mentioned Phantom as well. I think that did a lot. Like, I think the crypto industry always talks about the killer app, or like what's going to kind of take it to the person that doesn't know about DeFi or crypto. And I think apps like that, even my friends that didn't know anything about crypto started to hear about obviously meme coins, and they had an app that was usable that they didn't really need to know anything about crypto to use. So I think that's been in that kind of time where, the development and the technology is there, that it's matched up with meme coins, and they've made really good products around it. So I think that's been a big thing for it as well.
Well, so I'm most excited about the fact that now meme coins can be traded in regulated fashion, because we were saying earlier that one of the worst things that's happened to crypto is just how people have been just launching meme coins and rugging them essentially. But now we have actual kind of regulated products that can be traded, and people don't have to think about, like you guys are saying, they don't have to think about, is this one safe? And they don't have to know about all the rotations between the blockchains and between all that stuff. They could just look at an indice and get into some of the meme coin hype without exposing themselves to too much risk. I mean, of course, there's always risk, but
I love the point about capital flows moving from blockchain to blockchain. And just to bring it outside of the Memecoin conversation for a minute, just looking at our broad-based index, looking at Coindesk 20 again, that's been the way that people have made money in the index. Last year, Solana was among the top performers in the index. And this year, Ethereum is one of the top performers, along with XRP and XLM with Stellar. And I don't think anybody would have necessarily, made that bet, right? I think there were not a lot of Ethereum bulls in April.
I love that call because it was something that I wanted to talk about on this, because I was like, I've kind of done the similar thing where you've got some Bitcoin, you've got some Ethereum or Solana. I think people might have made the bet, but they wouldn't have timed it. Like that's
completely right. They would have come in at the beginning of this year like Solana's going right to the moon. Solana's kind of flattish on the year, and this past weekend's activity notwithstanding, I think whether even if you're observing from afar and saying, hey, I don't trade meme coins, but I love what they're doing for these blockchains. And if they're really helping to fuel Solana or BNB, which is not a Coindesk 20 name, but a name that people watch, is meme coins going to drive the success of these blockchains? And then all of a sudden you have the Genius Act, and then you have a lot of stable coins getting broadly more popular, and suddenly you have record volumes on Ethereum again, on Ethereum's base layer, right? It's like, whoa. And then you have ETF adoption and and then the second tier money is leading to inflows into Ether ETFs that sometimes is bigger than the inflows to Bitcoin ETFs. And then Bitcoin pauses because of macro. You think like, forget about the 5%er investor who just wants to allocate 5% to crypto. Even an active trader would have had a tough time really kind of getting it right, getting that timing right. They even if you thought Ethereum was oversold, even if you thought XLM might have another leg in it, right? Even if you thought like, well, Solana had a good run, maybe I don't think timing would have been really, you would have really had to nail it, right? And yet our index has outperformed Bitcoin year on year. So it's not lazy to select the index and just go for, I know there are going to be winners this year, and the winners are going to grow and they're going to become more influential in the index. And I'm just going to do that rather than, sort of pat myself on the back for timing the market or picking tokens specifically. I think that's just been such a win. And this idea of capital, movement, capital velocity is just such a perfect example of that.
Yeah. I think the last week is like demonstrative of that, like with Bitcoin kind of coming back so far, but then kind of Ethereum and Solana have stayed up a little bit, like especially Ethereum. So there's kind of different movements happening that make the CD20 a good way to trade it. And like I definitely was following crypto Twitter when Ethereum was like as dark as it could be. It was like there was no coming back at all.
It got dark.
And then
it's the end of last year.
Yeah. Oh my gosh.
Everyone was saying it was dead. Everyone was saying Ethereum's dead. Ethereum's dead.
End of last year, you had Trump basically won the elections, launched a meme coin. It was, Solana, I think, was at $270 all-time high, and Ethereum was in the thousands, I think, 1,500 or 600, something like that. So at that point in time, if you fast forward to 6 months and say, Ethereum's going to be close to $5,000, and Solana's, down 20% from all-time high or 30% from all-time high, no one would believe you. It's a very difficult market to trade, and I think that probably comes back to the point we've talked about already about the maturity of the market. I think Bitcoin itself has been a lot more, I'd say, quote unquote, stable in this cycle. Basically from its sort of depths of 15,000, it's just sort of kept steadily increasing, and then it sort of range bound, and then it goes one leg higher. Whereas sort of in previous cycles, you see sort of Bitcoin have 30-40% corrections, every couple of months. But I think this time around in the cycle that, those trading opportunities or those buy the dip opportunities, especially on Bitcoin, maybe hasn't been there. And I think when that hasn't happened, it's made it very hard for traders specifically to trade the altcoins, because, you don't know what a bottom is, you don't know what a top is. And I guess, you're sort of trying to figure out value. Why is Bitcoin at 115,000? Why was it good value at 70,000? I think it's very hard to sort of determine that, unlike previous cycles. But yeah, I think and then I think capital rotation, right? So Ethereum to Solana, and then Solana to some of these other altcoins, and then all of a sudden there's a meme cycle. It's been crazy.
All the stablecoin stuff as well. So I was just going to mention all the stablecoin, like where are people going to use coins on? They're kind of all fighting to be at the top of the tree. So all the different blockchains that's available on. There's so much kind of with the regulatory piece and building on these different blockchains. They're all fighting to be, the underlying technology of the future. And I feel like
Tether has launched a blockchain too. Tether is launching Plasma.
Yeah, they've launched, and there's a couple of others, but I feel like it's going to be hard to pick who wins that, over the next period. There's going to be lots of different institutions that are going to be picking one or the other. So again, coming back to the CD20, it's going to be a nice way to trade that something's going to happen. I don't know exactly what it is, but a few of these blockchains are going to win, and I can just trade the market.
Yeah, we don't know who's going to win. That's the thing. And I keep getting asked by people, would Solana exist without meme coins? Would it have done as well this run without meme coins? And my opinion's becoming more and more. And look, I was a Solana bull. I invested heavily in Solana in the bear market, and I wrote it up, and I thought it was going to keep moving up. But now I'm starting to think, if you remove meme coins from Solana, not that we're ever removing meme coins, but they do rotate between chains. I'm not sure if Solana has much else going for it.
We're pretty comfortable. I mean, our firm has announced a lot of things that we're working on with Solana. I like that meme coins have gotten Solana to where it is, but when you talk to people in the foundation, these are serious folks who understand and appreciate why they are where they are. And I think stable coins and other more, I guess, everyday utility properties will help propel Solana further. So
how many blockchains can survive, right? So we got Ethereum.
Great question.
How many can actually literally be like at the top? Like, we've got 5, 6 maybe. And is Solana going to be like 5 or 6?
I think a share.
It might look a bit like the tech world. There's 5 to 10 that can survive, or what?
How many chip makers, right?
Yeah.
How many software companies? I think one of the great analogies I heard, and I'll have to maybe in show notes get the attribution correct, but if I go to buy a cup of coffee and I use one mode to transmit money to make that $3 purchase or $4 purchase, I need a certain level of speed and a certain level of security, and probably both me and the coffee shop agree that fast speed and low security are acceptable, right? But as those flows of money get aggregated from the coffee to all of the transfer payments of that day to the end of the day, Bank A and Bank B, making net payments to each other of several $billion, they'll probably sacrifice some speed for some security, right? So you go all the way from Venmo or PayPal all the way down to a Fedwire. The requirements and the compromises with respect to security and speed change. And those layers, I think, will each need to be fulfilled in the blockchain space. And that can be done with layer 2s on top of Ethereum, but it can also be done with different blockchains. So I think there's room for a couple. I like the fact that you can have stablecoin activity on many blockchains. In fact, you kind of have to be on many blockchains to have a credible stablecoin. So I don't think that you have to have one that's going to survive. If meme coins help Solana to get where it is in terms of its musculature now, that's fine. I think that we're our firm and our parent companies certainly are feeling pretty good about Solana's utility and importance. But I agree that you're not going to have 50 important smart contract platforms. I think you'll have a small number. That's another good thing, by the way, about indexing, that over time those more important blockchains will find their way in. So if an investor, not a trader, wants to allocate to the asset class and kind of leave something there for 10 years and come back, you're going to have the winners in 10 years, not the losers. It'll self-select. I like to think back to investing in tech stocks. And sure, NVIDIA might have been on your list 10 years ago or 15 years ago, but probably wouldn't have been in the top 5, right? And look at what you would have missed if you had picked your basket 10 years ago and left it static versus letting even, whether it's the NASDAQ 100 or S&P 500. Now you have S&P 500 has 8% is NVIDIA. So look at what you would have missed by not indexing. So it's a great time to see the space evolve. Stablecoins are a great example of being on many blockchains, but we agree it'll be some, but not 50 smart contract platforms.
I think indexes are important for people because even if you're deep in the trenches of crypto, you couldn't afford half the stuff that happened this bull run.
Yeah,
and I am deep in the trenches. I miss so much. It's impossible. I'm there every day.
Yeah. I think if you for a lot of people, if you're trying to juggle a job and trading meme coins or crypto, you're probably going to run into some trouble. So the CD20 can be quite a nice thing to have. That makes so much sense, especially if you're holding it as well as a spot product and holding that for time. It really helps you there.
The other thing that's happened this year that I think creates an issue for crypto traders is that volatility has been pretty low. Like Bitcoin volatility now has, even implied vols have drifted down below 30. I mean, I haven't been in the business as long as you 2017ers, but I regularly recall that, 100 vol for Bitcoin was kind of no big deal. And whereas investors want to have the best risk-adjusted returns, traders want the opposite, right? They want concentration and they want volatility. And Bitcoin isn't really delivering, it's delivering returns, but it's not really delivering volatility. So it's a fantastic buy and hold asset, right? In that sense, in that kind of Sharpe ratio sense. But in a sense of movement, it's been pretty slow. Some people may feel as if trading via index sacrifices volatility. But Coindesk 20's volatility has been regularly 20 vols above Bitcoin. And when I look right now, as of last night at Coindesk 20 volatility for 30 days, it's been 60, right? Versus Bitcoin's been 32. So you don't have to give up volatility to trade an index. And so I think the appeal for that for investors, for traders, is going to be important. For investors who are allergic to volatility, well, let's just remember that the distribution of that volatility tends to be a lot more right skewed than for traditional asset classes. So this idea of downside risk being mated to or being highly correlated with higher volatility doesn't really map as well to crypto. So investors should not be afraid of volatility. Traders who crave volatility should understand that index volatility can be quite high as well.
Yeah, I'm definitely interested to see that with our trading volumes because it's a good way with the CD20. When the market's pulling back and you want to short the market, you can get some more of that exposure to those altcoins that are dropping more heavily than Bitcoin, rather than having to pick which one drops by 10% or 15%. You can kind of just move. You get a bit of exposure to all of that. I just think it's a helpful tool for traders. Just kind of waiting to see that with our partners because I'm excited to see people trading it.
Are you seeing a lot of demand from your partners for Eightcap Embedded?
Yeah, so the partners have all asked for it. They've asked for that, and they've also asked to have the other indices as well, the meme indice and the top 5, and there's a couple of others as well. So Yeah, I think the choice for those retail traders, all the things we've been saying, there's different benefits to each of them, but it's just giving some of those maybe not as professional and not as full-time traders to have a little bit more confidence when they're trading the market. Most of our user base are kind of retail or professional, and most individuals rather than institutions. And then our partners are the same, where they're mostly retail or professional traders. So yeah, I think it's we'll jump on here in a couple of months' time, and we'll be able to start to see how that's tracking. But excited to see it.
And for Eightcap Embedded, what makes it attractive to the likes of Coinbase and other large exchanges?
Yeah, so the target at the moment for us has been probably more the regional exchanges than the top guys. A lot of them have obviously gone through acquisition and licensing themselves. We see one of the major strengths in Embedded is helping some of the medium-sized exchanges to quickly get access to our licensing through appointed reps, so that they can offer regulated derivatives, crypto, stocks, indices on their platforms, within 3 to 6 months, instead of 1 to 2 years with a $10 million bill for having to acquire or establish a full kind of European license or other kind of rest of world licenses. So the regulatory side and helping them fast track themselves into that is probably one of the huge benefits. Obviously, giving them access to multi-assets when the markets are, say, flat in crypto. There's other opportunities that are happening in the other asset types, and I think asset types like gold and things like that are kind of coming more and more into the crypto space when Bitcoin's compared to gold, and FX is coming more into that space as well. So we're finding that crypto traders, like for instance, 20% of our deposits come across in stable coins to Eightcap's platform. So we're getting crypto traders move from off the crypto platform into a TradFi broker, and they're trading stock indices, gold, majors. So we've kind of seen that there's appetite there for them to do that. And now the embedded product is actually taking that to the exchange rather than them having to go off exchange and move across. So yeah, they're probably some of the major benefits, but it's moving really quickly that way now. There's a lot of appetite for this multi-asset. So yeah, the product's going well.
Would you say that post-COVID, people have taken more of an interest in trading specifically? Like, I mean, from our side as well, prop challenges specifically, like post-COVID, I think the idea of trading, whether it's a second income or people that have taken it more seriously, I think we've seen a huge spike of that, or at least what I've seen from my experience. Would you say it's similar, and is that maybe the reason why exchanges are sort of going towards that multi-asset sort of viewpoint?
Definitely. Like the size of the market, the addressable market of investors and traders has risen astronomically, like since COVID. Crypto's been a part of that, getting people into that type of product. COVID was a big part of that. There's a lot more people that work for themselves that are kind of individual workers. So that's definitely opened up the amount of traders there are out there. There's more people that speculate. There's predictions markets. There's crypto. There's so many different things, and there's probably a little bit more risk appetite from new generations, especially in crypto. So that's definitely there. Like, I think I saw I think it was Lad from Robinhood was talking about this, and he was talking about the fact that because costs have gone up, it's kind of harder to get ahead. Sometimes, like, the returns that are required, a 10% return can't do it anymore. So there's definitely more appetite to look for higher returns on these more kind of speculative investment products.
I actually, that leads me to a question that I want to ask. Actually, you know what? This question is going to be for all three of you guys. In one sentence, what's the biggest trend that you think is going to define trading in the next 12 months? We'll start with Patrick.
In the next 12 months, I think I would say it's probably going to happen in the European market because of the fact that the licensing's there, MiCA and MiFID, and a lot of the players that are providing products there. So, it's probably easy to say that the tokenized stocks looks like, that's going to launch and be something that people pick up. So I don't think that will define trading, but I think that will definitely be in the headlines over the next 12 months of how that's happening. Maybe that it's extending further to private markets. And, I think the private market stuff is really exciting in tokenizing of stocks. So, if that happens in the next 12 months, like things would move pretty quickly. But yeah, we'll see.
How about you, Venkat? In one sentence, what's the biggest trend you think is going to define trading over the next 12 months?
I think I largely agree with Patrick, but I think it will be, real world assets coming on chain and the tokenization. So just a very small example, but I was talking to my brother yesterday, and he's probably a bigger crypto buff than I am, but he was talking about how there's some protocols on Solana which allow you to long or short real estate markets around the world. So there's obviously X stocks, which Patrick kind of just touched on, but real estate itself, having the opportunity to long or short the Tokyo market, and getting sort of, I guess, exposure to a foreign real estate market, in a decentralized manner while sitting in Australia is I think such a huge deal. And I think things like that will really start to shape the way we sort of perceive ownership of assets and just the ability to trade assets as well. And I think that's really exciting.
Okay, interesting. Good answer. Yeah. And Andy, how about you? Same question. One sentence, biggest trend.
Biggest trend is that many, many more people will be trading options on digital assets than they are right now through a variety of venues, all the way from DeFi platforms to centralized platforms to traditional platforms. I think options use is going to explode. And for many people, especially US people who don't have direct or easy access to the perp market, the options market will offer that kind of gearing and conditional exposure. So the options market has been, I think, closed off to too many people. You look at IBIT, sorry, there's a long sentence, but my co-participants also gave themselves long sentences.
Yeah.
You'll see 2 billion a day in IBIT options or MSTR options, but that's just the beginning. I think the options market's going to find many ways to get more options products to people.
I was just going to say, I have options is obviously, kind of come a lot from the US, and, platforms like Robinhood, took it to retail to some extent. And I have seen the firms in the UK and Europe here all more and more offering options, stock options. So I think it's a really good estimate that the same thing is going to happen in digital assets, that's going to be a product that kind of expands over here as well, not just in the US.
Yeah, it makes sense. Guys, this has been great, but we have to wrap this up. A huge thank you to Andy, Patrick, and Venkat. Smash that like button, subscribe for more. See you guys later.